very good evening and welcome to the Market Bridge Shora Show. My name is William Evans, and tonight we are going to be looking at investor protection. To have this conversation with me is Miss Muligo Noella, who is in charge of market supervision and inspection, of course, the manager at the Capital Market Authority. Most welcome to the show, Miss Noella.
Thank you.
From where you sit, one would want to understand what exactly is investor protection. How is it done? Why is it important?
It is important simply because we can't ignore that out there will always be illegitimate activities that prone to be investment that are not, and that are not legit. So that's why market the supervision comes just to maintain that confidence with among the investors.
What you're suggesting is you are doing you're doing investor protection because there are sort of risks they could fall into, of course, violations and what are some of the common ones that you've noticed in your single inspections, when you're carrying out your day-to-day, what are some of the things that you identify and you're like, oh, these are risks, and you keep protecting these investors from falling for such risks?
And when you talk about investor protection, this is because, if people entrust you, investors entrust you with their savings, and they expect to have a fair treatment, and again they expect their money to be safe. So of course the risk number one, that would be unfairness on the market. So they are not the market intermediary or the licensed entity is not acting in with due care or fairness that is due to any investor. Let's say, for example, conflict of interest. They put their interest before the interest of the investor. That can be one of the risks. And two, misappropriation of funds. So the capital market put in place safeguards such as regulation guiding how clients or investors should be treated. And among those, that would be issues regarding the safekeeping of their investments. So, for example, I'll just give an example that an investor, a market intermediary or a licensed entity is not allowed to keep like investment of his or her clients commingled with their own funds or own operational funds and all that. They have to keep them segregated. It's just one of the example that I can say that we can say that are risks that we deal with on a daily basis. So they have to put those kind of structures that will prevent the misuse of the funds, misappropriation of the funds, and of course the conflict that goes with it. The conflict whereby, these are the ones that are dealing on the market on a daily basis. How do we ensure that they execute the investors' orders before their own?
For people that, I just want to understand, like, how, when you talk about the market should be fair, or investors and these other guys that are dealing that are meeting on the market, there should be a bit of an aspect of fairness. What is fairness on the capital market?
Just an example: when you go to the Rwanda Stock Exchange and when the market is on, fairness. Well, when the trading is happening, the first in is the first served. So you will see for yourself that it's there. It's when everyone is trading, the one who has placed the order in the first, and of course it matches with the prices. That there is no way another one can come before that. So that
is in terms of first
exactly, yeah. So that's the way. That is the simple. I'll say the simple way to explain that. So that is why all these structures are put in place. So to avoid that fairness or transparency, and it's there open where everyone can see. You know, this order was number 1, this order was number 2, and the prices are these, the offers are there, the bids are there. Any investors is able to see, and every player or every market intermediary is able to see. So it goes smooth in a way that it is transparent and everyone knows this is how it was supposed to be done. Yeah.
In the event that there is a bit of unfairness, how do you follow up the claims? What sort of penalties do you give to these people?
So most of the time, we encourage that if they feel that they have been treated unfairly, to seek for help, for assistance. If they are not, if their complaint is not resolved, of course, if you have a problem with your service provider, you first go to them and say, I think this has not been done, that so and so, and if you feel that they have not resolved to your satisfaction, you come to CMA. So when they come to CMA, that's when we intervene. So if we find out that there has been really unfairness and all that, of course, that's when the enforcement comes. But we have not reached to that point because they will try
to solve
issues at their level before it even comes to our
So in terms of penalties, the enforcement is too technical. In the event that you've gotten to know, let's just assume, of course they haven't, as you say, they have not already come and complained, but in the event that an issue is not solved from the two, and then they come to you, what sort of penalties, how do you enforce? In actual, how do you punish? Yes.
Of course, they can be warned. They are given a reprimand or warning. Also, if it's something that is very serious, that's when they can even be suspended. Yeah. The suspension is one. Of course, there is also fines, administrative fines that can be applied, suspension, or even revocation of the license. So there are different ways depending on the seriousness of the issue at hand.
For first-time investors, young people that are out there that do not know how things are done, from where you sit, do you feel as a country we've done enough in terms of education, financial literacy, that investors actually know they have these rights?
It's an effort that must be maintained because these markets are dynamic and there will always be new things coming up. And that's why I am of the opinion that the financial literacy is something key that will never end. So that will keep improving as we go, as we grow. Simply because for a new investor, of course, they are reluctant. They are not confident in such a way that they know what their rights, or even the risks. So the financial literacy can be broad when, like this one that we are doing, targeting everyone, any investor. But now when it comes to the relationship between the market intermediary and the investor, they must have that relationship in such a way that the investor is informed, is educated regularly, on the investment they are doing.
I will ask you to look straight in your camera and say your final words to someone that is new to the market, or someone that really is considering, coming to the market. How safe will their investments be? I want you to give them that assurance, but also as you give us a broader picture of the 10, where you see this protection, investor protection in 10 years in terms of shifts in reforms and innovations in the face of AI and all those things.
There will always be new things and new opportunities, but that will always come with new risks. And of course, in this dynamic world where we need to adapt ourselves. Like in few years back, we didn't have what we have today that we called regulatory sandbox. That was a solution that was put in place just to address those issues of innovation. So regulators also are required to adapt themselves as we grow, as these market changes. We also need to adapt ourselves. You will hear people talking about RegTech or SupTech. These are technologies that have now been adopted to cater for those changes, especially those changes that are coming up in these markets. So now, if I have to talk to investors, the first thing that I'll say: be cautious and know, and at least make the necessary inquiries. Is this legit or not? Because out there are many that will not be legit. So if they are legit, definitely they will be licensed. There are financial regulators all over. So CMA is just one of the financial sector regulator together with the central bank. So first of all, when it comes to investment, check whether the service provider is licensed. If not, is the service provider authorized? Because sometimes just for CMA to cope with these changes, sometimes when there is no regulation in place, it can also provide an authorization waiting for the regulations to be put in place. So seek whether the service provider is authorized. Secondly, seek to know your rights. For any service providers regulated under CMA, we require them to provide you with the information regarding your rights, and also what are you investing in? What are your expectations? Those reports must be regular. So they are not allowed to leave you in the dark when you have invested. They need always to give you information and reports on regular basis on your investment. For anything that has happened to your account, investment account, you need to have the reports on that. So investors, please seek information and see whether the service provider is licensed. And when you are given the opportunity to invest, seek to know what are the risks that are regarding those investments. And that is one of their responsibility. If they don't, seek another one. Seek another one until you are assured of what you're doing.
Many thanks, Ms. Muligo Noella, Manager Marketing, Supervision and Inspection. Of course, you heard it from the horse's mouth itself. Of course, it's not just the world. This show is also dynamic. That is why we scale the heights to bring you conversations that matter. Now, I want to hear from you if you're interested in any topics. Of course, you can check out the Capital Market Authority socials. So get to us. We want to keep in touch. And that is how dynamic we can be. From me and the rest of the team, have a great evening. Goodbye. See you next time.